Hello. Well, if Daniel Wyman has done his job, then you're all hearing this live through the Facebook event. And if he hasn't, then Daniel Wyman's no longer working for Castle Realty. Uh, we are doing this live update for you because things have changed a lot in the real estate world. I'm sure things have changed a lot in all of your worlds, not only over the last few weeks, but even as of last night with the governor's announcement. And we spent most of the day sifting through our industry trying to figure out, well, what are we allowed to do and what are we not allowed to do. So I wanted to give a brief, I'm hoping this won't be more than 10 or so minutes. I just like to give you some quick updates. And then as things change, which they tend to change every couple of days, we'll be back with another one. So if you have any questions, and you can type them in, Rebecca here, let me introduce who's on the call here. We have Daniel Wyman, our transaction coordinator for Castle Realty, Rebecca Bingaman, my partner in crime, and Jason Roberson, who is our leading lender with Guardian Residential Lending. And he's here to answer some of your financial questions. And if you don't have any, he'll answer our financial questions. But the purpose of this is really just to help continue to separate fact from myth and stop the wild assuming of what's happening. I think all of us are in jeopardy of assuming what's going to happen because nobody really knows. We're in pretty uncharted waters. But there are some things that we can tell you that might help you in, and we're hoping it's a comfort. But you know what? We're not going to minimize the situation. It's a big deal that's going on right now, and we're not minimizing that at all. So, the first part of our update. What is the stay-at-home order in terms of what does it mean to us as realtors? How will this affect the people we're working with? Some of you that are listening to this are clients of ours in the middle of a transaction or have listed a home with us, and they want to know what's going on. Fair enough. We had the same question earlier today, and here is what we were told a few hours ago, that real estate brokerage services are not on the list for as an essential service. Some of you might argue if you're trying to close your home, but that's the way it is. Now, there are people in our industry who are considered essential, and these are the people who are working in the financial services industries, title companies and lenders, whose job it is to help us get these transactions closed. So that's the really good news. We still have a functioning system to close the transactions that we have in our pipeline. So if you're under contract, we may have some delays here and there, but for the most part, the services will continue. What we cannot do, we can't show homes. And I made a really good argument for disinfecting the lockbox and then walking to the other side of the property and letting the buyers show themselves the home. But we have been told we need to cease all out of the home real estate activities. So that's actually not horrible news either. 90% of our business is done remotely, and all of our staff work from home. So we're set up to continue to work real estate. The only tricky part is getting people inside to see the home. Now, as funny as that might sound, we do this all the time. We live in an area of military buyers that move in here and move out all the time. A lot of the people coming from all over the country, sometimes other bases in the world, they don't have the luxury of being here in person to see a home. And we try to fill the gaps with as much information and drive time information and Google Maps, and we've even gone to the properties and taken some video footage. Well, with the help of our sellers, we can continue to show homes virtually, up close, all the little dents and flaws. It's not ideal, but it is possible. And we're going to experiment with that over the next couple of weeks and let you know how that goes. Our order was to cease leaving the home like everybody else, except for essential services, for the next 2 weeks at least. We know this could continue longer than that. But if we can find some creative ways to keep showing homes and keep writing offers, we're going to do that. Now, I have checked in with our home inspectors, and Jason Roberson has checked in with the appraisal community. And as far as we know, they are still operating. Now, they may be told at some point they can no longer go out and appraise homes, that they can no longer go out and do home inspections. And if that were to happen, we're going to be pretty much at a standstill. There is a creative possibility that we can still match up buyers and sellers of real estate, agree on prices, and put things on a hold so that when the stay-at-home order is lifted, we can pick up right where we left off. We will be experimenting, we'll be looking at the legalities, and we'll be making sure that we don't do anything that isn't in the best interest of the clients and the community. But right now, real estate still continues to happen. We're just not going to be able to go out and show you a home in person for the time being. More on that later. The next part of this that I wanted to share with you, because I think it's relevant to everything that happened up until yesterday and everything that's going to happen when the stay-at-home order is lifted. We've been under this crisis now for several weeks, and it has escalated every day. But as of yesterday and the 3 days prior to, we've still been selling homes out there. And I think that's the number one question that I've been getting is, what's happening with the market in general? Most of you know, and we've been giving updates on this for 2 years now, we have a critically low inventory situation across the country, and nowhere is worse than right here in Washington. And nowhere is worse in Washington than right here in Thurston County. There just aren't enough homes for the buyers that want to buy, not enough homes on the market. That has led to some very steep increase in prices, as all of you are aware. Well, as of right now, as in the last week, we've seen a number of new homes coming on the market, and I think there's good reasons for that. I believe we have some sellers who are, wow, I really was planning to sell this year. I hope I didn't miss my moment, naturally. We also have some sellers that were waiting for school to get out. That's a normal activity that, that's a normal time of the year when we get an influx of inventory because the kids have graduated, they're ready to shift to another school. Well, for a lot of people, school's over for the year, at least in their minds. This hiatus is going to take us darn near to the end of the school year. So I think a lot of people who were waiting for that event have no reason to wait. And then there's just the natural, there are more listings that come on in the spring. But you put those three things together and we've had an influx. The number of pending homes that have gone pending in the last 3 days is still higher than the number of homes that have come on the market. So we haven't hit some critical tipping point yet, but we are seeing that there's more homes coming on the market, and we anticipate that will mean a cooling off of prices. Now, we can speculate that if we hit a deep recession, if this continues for long enough and jobs are continuing to be affected and this goes on from weeks to months, we can go down that road. Of course, we know that if the economy takes a tumble, that prices in real estate could as well. Probably, but not for sure. There are people right now that are out there looking for good deals on the stock market, and they haven't turned their eyes to real estate yet because our prices are holding. People still want to sell, people still want to buy. So when we talk about what does this mean in terms of finances? I think that's probably the stickiest wicket here right now is buyers' incomes. They're in question. People are uncertain. How long am I going to be able to work? Am I going to get paid? Am I going to get unemployment if I'm laid off? These are big questions for tough times. Now, the reason I have Jason Roberson from Guardian Residential Lending on here is he's been visiting our weekly meetings and talking to us about what this means from a lending perspective, where the trouble spots are, what's different, and what's the same. Jason, could you tell us what it looks like right now for a buyer going to get a loan to buy a home? And what you guys are looking for in order to qualify them?
Sure. A lot of the processes haven't changed. Lenders are still on board. The stay-at-home order hasn't affected us that much. Most lenders have the ability to work local. Those that are not or work remotely. Some lenders who don't have that capability, the small banking industries, are making provisions to allow them to do that. So lending is still going on. The focus for us is the obviously the safety and the health of not only our clients, but also the people that we work with, the title and escrow companies and the appraisers, and even the county recording departments. So every one of those entities that's involved in doing a loan, in the loan process, they still have the ability of getting things done. The counties have e-recordings that they're able to do. So that hasn't changed. It actually would probably speed up the process a little bit. Appraisers, you may expect as a seller, you may expect an appraiser to call you up prior to inspection and just ask you a few questions about the health of the home, because they want to protect themselves. The lenders are starting to, I know my company just made the announcement 30 minutes ago that we are going to be doing more and more, and we're told to order desktop appraisals. So that means an appraiser may not even show up at the house. They just, at the worst case, they may drive by, take a picture of the front, but they are considered essential businesses. That's part of the financial industry. So kind of where we're going to get stickier as lenders is the verification of employment. Normally on 10 days before closing, every lender will do we do a verification up front, and sometimes it'll be a written or verbal, depending on the loan process and what the requirements are. 10 days before closing, we're going to ask for a verbal verification of employment. Now, we've just tightened that up to where it's got to be 3 days before funding the loan. And then before the loan funds, we're also going to, our company is doing an affidavit of employment. So we want it in writing from the employer also that our clients are still employed, because as we know, things can change overnight, and it can be done that quickly. So the whole process for refinancing, purchasing a home, everything's still in place, and we have plan A, B, and C for any of those steps that may we think may get held up. So it's business as usual, just with some caveats now. So not to worry, lending is still going on. The lenders want to do business, and we want to get people into homes, and we want to get them to be able to take advantage of the lower interest rates that are available. And if you want, I can touch on that real quick on what's happened over the last month.
Yeah, I'd like you to talk to us about the interest rate situation leading up to the crisis and how the crisis affected that.
So as many of you probably saw, you probably got mailers around the beginning of March advertising super low rates, rates down to 2.5%, 2.75%, and depending on what type of loan program that was. What happened over the course of the weekend, if you look at those mailers were probably printed out March 3rd, March 6th. By the time the mailers made it to you in the mail, interest rates had increased, and in some cases a full percentage point. So
a full percentage point. Now you'd call that volatile, right?
That's huge in our industry. Prior to that, the largest increase that I saw was just after November 16th or November 8th of 2016, when the new president came in. Interest rates increased the day afterwards, and they increased in some cases 0.5%. Before that, it's been about 9 years since I saw an overnight increase of 0.3%. So when it went to 1%, that was a huge deal. So what people got into, the result of that is people got into, with that rate increase just over the weekend, people were still getting the mailers, and they were thinking that the interest rates were still 2.5%, or they were thinking they're 3% or so. So the best thing for you to do is, those are just indicators that the rates have moved. But it's a good idea for you to call the lender that you trust and talk to them about your specific situation, because not everybody gets the 2.5%, not everybody gets the 3% interest rate. It's not available on all different loan programs, depends on credit score, LTV, all different factors go in there. So I get the question a lot, what are the interest rates today? there's too many variables to tell you, but whenever you get a quote from like a general mailer, it's usually if you've got credit scores over 760, if you've got maybe 20% equity in the home, and you're not doing a cash out refinance, if you're just doing a rate and term. Sometimes rate and term refinances are a little bit different than purchase interest rates. And what they don't tell you a lot of times is how many points are involved in buying down to that particular interest rate. So I'm, as Dave, as you know, I'm very transparent. I'm very honest. I do analyses that don't cost my clients anything all the time. In fact, I spend a majority of my day doing an analysis, and sometimes it can go an hour or it can be 2 hours, whatever length of time it takes to do that. So since then, we've seen interest rates just do a roller coaster. They go up and they go down, they go up, and the end of last week, we're up over 4% on interest rates. They spiked up over 4%. And
for those that don't know, for those that haven't been following this, if we go back a year and a half ago, I got a mortgage 5.25%. So it is not like this has taken us back out of the current economy that we're in. It's just that it's happening so fast is what's shocking about it.
Right. And a part of the analysis too is some people are looking at, they just got a loan at 3.75% last year, and the interest rate went down to 3 or 3.25%. Part of the analysis is, what is the cost of doing that loan, and when are you going to recoup those costs with that savings in the interest rate? And then what's the term that you're going to stay in your house? Are you going to really recoup those? A lot of people will focus specifically on the interest rate, but there's much more to it than that. And we need to make sure that you have an educated decision to determine whether you're going to.
I think we're going to do another one of these sessions just on the financing, because there's so much to it if you're interested to find out what motivates the investors and how does the investors' interest in the bond market versus the stock market affect our interest rates. I think it deserves more time than this. I think what's most important is what you just shared, and some of it's new information and some of it is as old as the hills. Like whenever you're shopping for a mortgage, you've got to compare apples to apples. It's not just the rate. It's the closing costs, the loan origination fee, or what we call the upfront costs, the length, the term, your credit. It's a personal thing. And if you have an offer, you can take it to someone like Jason Roberson. And yes, Jason, I've been using you for mortgages for
over 12 years.
Yes.
Over 12 years.
Yeah. And there's a reason for that. Because the lenders that we use, that we have a personal relationship with, if they look at somebody's offer and say, yeah, we can't beat that, they should go with that. That is the confidence I need to know that if they say, that they can beat it, that they can do better, that I know they will. Now, did you want to touch any further on some of the the jumbo loans?
Jumbo loans is just more. Jumbo loans are a little bit different animal than what a majority of the loans are. Most of the majority of loans are, Fannie Mae, Freddie Mac. You've heard of those. Ginnie Mae. Those are government loans, GSEs, government-sponsored enterprises.
Right.
So those are all still there. We've actually got some relief on the appraisal process with Fannie Mae and Freddie Mac. If you're doing like a refinance and you currently have a Fannie Mae loan and you're going to refinance it back again with Fannie Mae, we've got some relief on appraisal processes on those. So those what I call mainstream loans are still kind of the same. The information that we're receiving, and actually I'm still receiving emails on it right now, is the jumbo market. Jumbo market, those funds that's private money from a bank who's using their own funds, or investors that are using their own funds. They're not going to Fannie Mae and Freddie Mac. They're not guaranteed that way. So those funds, that's liquidity in the market that is being dried up because investors are just not putting their money there right now because they think it's a little risky. So if you're having a jumbo loan in most of Washington State, it's a 510-400. If your loan amount is above, that's considered jumbo loan. Pierce,
So 500, just to be super clear, most people know the term jumbo loan. Most people don't know what that cutoff limit is, and it does change year to year. $510,000 purchases and up, or excuse me, $510,000 loan amounts and
loan.
up are the ones that are in a little bit of trouble right now because of the timidity of the investors to want to take the risk, because it is more their risk than the VA, FHA, and standard conventional loans
Yes.
that have the government backing and assurances, because we're using their guidelines.
Yeah, and Pierce King in Snohomish County, that is 741,450 is the jumbo market. So that's what your loan amount is up in there. So the jumbo lenders right now are restricting, and there's only a couple that have started right now, but those are the industry leaders, and the rest will be following, we expect, in the next few days. So you may have to put down the 20%. Some of them are eliminating cash out refinances, investor loans. They're not doing those right now.
Okay.
So that's not the majority of our market, but up in King County, that is kind of a majority of the market. So it's just something to be aware of.
Right.
And as a buyer, as a borrower, one of the indicators, because and not all lenders are as transparent, but one of the key questions you're going to want to ask is, when can I lock in that loan? Because normally we can lock in a loan at the very beginning. And if your lender tells you that we can't lock in that loan until we're closer to closing, that means that that loan may not fund, because that's a red flag that the investors may not guarantee that those funds are going to be there. So the existing, we've got commitments from the jumbo lenders right now that the people that are locked in now, those existing loans, those will fund. There's some lenders out there that we know that we're looking at that they still may not, because we don't know if they're as liquid as they say they are, and that's based off of past experience.
So just to recap this whole situation, the loan process has not changed. Qualifications have not changed. Rates are fluctuating in the normal residential market within 1% up and down, but haven't gone anything outside of what they've been for the last year. And the most tentative market right now is the jumbo loan market, which is over $510,000 for Thurston County, over 700 and what?
41.
Yeah,
741.
741. So now there are people in that market, and that's something they need to be aware of. But anybody under that, which is the majority of the market, it's business as usual. The only thing that's really unusual is the volatility of the rate. But in the residential loans, just like anything, they lock in a rate for you at some point. You don't have to worry about it up to the day of closing. I think the most concerning issue for most people today, and what's on their mind, is their income. Now, they're at home right now. That's temporary right now. Some people are still getting paid and still have salaries. Some people are being laid off and have unemployment. But the uncertainty there, I'm sure, is what's on everyone's mind. So as a final note on this subject, my encouragement to anybody who's still in the buying market, who still wants to get into something, and in my experience, the buyers out there who don't already own a home are still very anxious to get something under contract and close. Even if their long-term concerns about our economy are on their mind, most people have told me, if we hit bad times, I'd rather own a home than be renting, subject to the difficulty of maintaining a mortgage versus maintaining a rental. It's a mindset, and I understand it. So it is in some ways business as usual in that department, and in other ways completely different. We're going to keep separating this out for you and keep bringing you more information. But if you are in the buying market now, over the next 2 weeks, or after the stay-at-home order is lifted, I think the most important relationship you need to have, and the most important communication, is with your employer, your HR department, because those are the people that will be contacted by your lender throughout the transaction and ask this very important question. Does this person work for you? And are they going to continue to work for you? Now, you don't want to put words in their mouth, and they're not going to want you to put words in their mouth. But I would make sure that they keep their reply to what it is seen at this moment. Of course, no one can guarantee anything for the future. But for right now, this crisis will pass. If it passes soon enough, we get back to work, we get back to business as usual. Just encourage your HR department heads, the people that will take this call, the people whose job it is to verify that you are indeed employed with that company, that they are speaking from factual what's now, and just ask them not to speculate too wildly. It's the difference between getting a loan and not getting a loan. And we're not asking them to lie or to put words in their mouth, just not to speculate in any kind of negative way. We can all do that, but it won't be very helpful. So moving on from that, and where I'd kind of like to wrap up this call, is just to speculate a little bit on what can we do right now. I don't really want to speculate wildly on what's going to happen in the long run. We'll get plenty of insight into that, and you'll be hearing it on the TV and the radio. What I encourage you to do, what the most important thing any of us can do, is to continue to separate fact from myth. What's happening from what we're afraid is going to happen. If you're going to stay educated, listen to the podcasts and interviews and things that come across the TV and radio. Listen to the people who have been there through tough times, been there long term. Talk to people with long vision. If you talk to a Warren Buffett, they're going to tell you when people are selling, go out and buy. Go against the grain, because they have long vision, and that's why they prosper. Now, I don't know who your financial gurus are, but go listen to the ones that have long vision, and you'll probably feel better after listening to them. And if you listen to people who've been through tough times, I don't know that I've been through the toughest, but we were talking before we started broadcasting here, and I've been through a couple of tough markets of extreme fear and uncertainty. You all remember 9/11. I was in real estate at that time. We were all fearful. We were all concerned about how this was going to affect our future. It did affect us. We went through a really volatile market after that. I don't think that was quite as impactful on the real estate market long term as the global financial crisis of 2008. That was one that 80% of all realtors went out of business. 80%. Home values plummeted for 3.5 years, and we recovered. The key is to adapt as a real estate professional and as a consumer. Adapt. Pay attention to what's going on. Don't act out of fear, and deal with each circumstance as it comes. Being through those difficult times has helped give me perspective, and this too shall pass. It really isn't just a phrase. People who have been through crises before, people who have, I don't know if any of you still have relatives that went through the Great Depression, but talk to them. The perspective is far more comforting than the fears that you'll get from hearing the details. So keep educating yourself, listen to positivity, and listen to people who've been there and done that. Don't give up on everything. Do what you can. Our real estate agents, we have 8 licensed agents with our company, and they are all spending this time doing what they can. If I can sell a house to someone moving across the country, I'm going to do that. And if I can help someone plan long term, I'm going to do that. Help someone make the right decisions during this downtime to remodel their home in a cost-effective way. Sure, I'm here for my clients. So is Rebecca and Daniel and Justin and Rob and Veronica and Autumn and all the people in our company. We are here to talk to our clients through this time. And spending a little time with our clients is actually a good use if we do have some downtime. I haven't found any downtime yet. I'll let you know if that happens, but we have plenty of conversations to have until this stay-at-home order is lifted and until this crisis passes. It will pass. I'm 100% sure it will pass. I don't exactly know how long, and nobody does, and that's okay, because we'll take those circumstances one at a time. I don't know if you'll notice, but the Castle Realty logo is changed, and it will stay changed through the duration of this crisis. Very subtly, we put a little green highlight and a little green check mark next to that. That is our commitment and support for safe and effective practices where this disease is concerned, we're not taking chances. We're not putting people at risk. We're looking past the immediate crisis that everyone's going to be okay, that we're going to come out of this and maybe have a few better values, maybe learned a little wisdom, have some better personal financial practices of our own to prepare for the rainy day. But we're looking past this, and the green check is the all clear. And that's when we get to go back to business as usual, maybe even business is better. So enjoy your downtime. I mean, if once you've done everything there is to do, and you've cleaned out your garage like we just did, and you've taken care of all of your spring cleaning projects, spend time, enjoy yourself. If there's nothing else you can do, then enjoy the time that you have. We've been living in a rat race for decades. This might be just what a lot of us needed. So keep educating yourselves. We're going to keep updating you. And above all, just call us with your questions. So until we do this again, be safe, be aware, and be well. Thanks for spending your time with us.
Thank you.
Thank you. Thank you, Jason, for your time. Becca, Daniel, thanks for being here.